Ladies and gentlemen, the stock market is up for the 9th day in a row on this massive news. Reported by the Wall Street Journal, Beijing is weighing fentanyl offer to the U.S. to start trade talks. There we have it, ladies and gentlemen. We're almost there. First step is really gonna be to pause the China tariffs. This is that start, that step to actually start a pause, to start negotiations. This is huge. This changes everything for our markets. China says, quote, the door is open for trade talks with the U.S. Now, we actually had a little bit of bad news overnight as well. It says U.S. tariff negotiators presented framework for an agreement with Japan. And it says Japan negotiators firmly opposed the U.S. proposal. So it looks like there's a lack of progress on trade deals with Japan. Japan's finance minister said the country's U.S. Treasury holdings could be a card in its trade talks with Washington, referring to the largest stockpile of U.S. debt held by a foreign nation. A lot of people think like China owns the U.S. I know we used to hear that more like 5-10 years ago. When I was a kid, people used to say like, China will own the U.S. one day. Obviously, that was incorrect. But what people referenced was China owning a lot of U.S. debt, a lot of treasuries. It's actually Japan that by far owns the most U.S. debt or U.S. treasuries. Now, Japan's finance minister says, quote, it does exist as a card, said Kato, speaking on a TV Tokyo program Friday, when asked if Japan's stance on not selling holdings could be a negotiation tool. Quote, whether or not we use that card is a different decision. So this is more than just like tariffs. This is about rates. This is about bonds and U.S. debt. This is about security and defense, not just about trade and tariffs. The S&P 500 is up 9% over the past 8 trading days, the biggest gain since November of 2020. Japan's Prime Minister Ishiba says U.S. auto tariffs are absolutely unacceptable in FNN interview. It also says the U.S. is reluctant to exempt Japan from the 10% reciprocal tariff. Take-Two sunk 16% today after delaying Grand Theft Auto 6 to 2026. I know this really doesn't have anything to do with the markets, but I know a lot of people are waiting on this game since it's been 10 years since Grand Theft Auto 5 came out. And that's unfortunate. We did also have non-farm payrolls. Now, here are the estimates you can see on screen. Morgan Stanley, Nomura at 160,000 apiece. Some low estimates like HSBC at 75,000, 100,000 at Jefferies, 85,000 at Mizuho, with a median target of 135,000. And on Kalshi, the betting markets forecast at 128,000. We beat those estimates easily this morning, okay? That's also part of why markets are doing well. Non-farm payrolls came in at 177,000, but last month you did see a big revision lower from 228,000 jobs down to 185,000 jobs. So that's what, 50+ thousand jobs that were revised away. Like 25% of the whole report was revised away. So yeah, there definitely is that, but you beat the estimates. Unemployment rate held steady at 4.2%. This is a sign that maybe we're not going into a recession. When Q1 GDP came in negative, and there's all these fears of things continuing to slow down, like Block and Amazon, coming in with lower guidance. It didn't really sound great. Non-farm payrolls was a huge relief today to see that actually come in better than expected. Manufacturing payrolls only negative 1,000. Government payrolls up 10,000. Private non-farm payrolls up 167,000, beating the estimate of 124,000. Like pretty much across the board, it was better than expected. Even the U6 unemployment rate, which is the The unemployment rate of individuals that have basically stopped looking for work at 7.8% versus the estimated 8%. So literally across the board, better than expected. Total vehicle sales for April came in at 17.27 million versus estimates of 15.7 million. Factory orders month over month came in at 4.3%. Last month was only a 0.5% positive, beating the estimate of 4% positive. So really, I mean, not like super great, not overheated economic data today, but better than expected. And in this market, when you just got a negative GDP report, that is good enough to send the average stock higher. And that is exactly what is happening today. Now, the overall number of foreign visitors to the U.S. fell 2.4% last month from a year ago. Travel sank 9% from Africa, 6% from Central America, 7% from Asia, with China down 11%. And permits to build U.S. apartments dropped below pre-pandemic levels, according to Redfin. Iran's foreign ministry says Tehran rejects threats and pressure after U.S. President Donald Trump said all purchases of Iranian oil or petrochemical products must stop. Oh, and I almost missed this. U.S. average earnings month over month came in at 0.2%. The forecast was 0.3%. That actually missed, but that's a good thing. Because, I mean, if you have earnings going up, that puts pressure on inflation. So, again, it was about as picture perfect of a report today as you could have imagined. Also being reported, the Trump team has prepped options for pressuring Russia to end the war. And U.S. short-term interest rate futures are down after the jobs data as traders trim bets on Fed rate cuts. Let's take a look at what the markets are pricing in for the Fed. The Fed meets next week on May 7th. That is 5 days, 3 hours, and 29 minutes from now, to be precise. There's a 4.2% chance the Fed is going to cut rates. That's down about 2% from yesterday. 95, almost 96% chance the Fed is not going to cut rates. For June, this is where you've seen the biggest move. June 18th. Yesterday, the probability was actually favoring a rate cut June 18th at 50.4%. Well, now it's at 37.5%, and there's about a 1.5% chance of a Fed cut next week and in June. So the odds are falling for June. July, you're still pricing in the first Fed cut, 57.0% chance of that. Now, let me tell you though, if we come to trade deals, quicker than not, these rate cuts are back on the table. Because we don't have an inflation problem right now. The inflation problem is gone. The reason the Fed doesn't want to cut rates and, get ahead of economic weakness is because if these tariffs do go into effect, you're going to see inflationary pressures. You're going to see shelves in Walmart and Target, Costco and other places that are, like being reduced, right? There's just not going to be as many products on shelves. And that's one thing that I can point to definitively and say, you're going to have some serious inflation pressures. Now, the Fed's not going to be able to help that. So why they don't cut rates already doesn't make sense to me. I think the Fed should be cutting rates right now. I think Trump's right on that. The Fed is too late. They need to urgently start to cut rates. That's the bottom line. But the Fed doesn't want to do that in case we do have an inflation issue. You can also see today, U.S. non-farm payrolls, the 3-month average was 152,000. Today's report brings that up to 155,000. Donald Trump says billions of dollars are pouring in from tariffs. And Donald Trump says we're only in a transition stage. And Donald Trump again repeats the Fed should lower interest rates. And here is the full post on Truth Social. Trump says gasoline just broke $1.98 a gallon. I don't know where the hell that is, because in Michigan it's like $3.40 or so. Like I don't know what's going on here in Michigan. It just doesn't make any sense. No, nonetheless, the lowest in years, groceries and eggs are down. Energy's down, mortgage rates down, employment strong, and much more good news as billions of dollars pour in from tariffs. Just like I said, we're only in a transition stage, just getting started. Consumers have been waiting for years to see prices come down. No inflation. The Fed should lower its rate. And Iran says the latest oil sanctions show the U.S. lacks seriousness in talks. In the news today, NVIDIA is tweaking AI chips to be sold to China. Nick Timmerhouse says steady hiring in April will reinforce the Fed's patience stance. Federal Reserve officials have broadly indicated that interest rate cuts will likely require clear signs of rising unemployment. Because April's employment report offers very few indications of a broad-based decline in hiring, Fed officials can easily maintain their wait-and-see posture at their policy meeting next week, including by saying little that would offer any sign the central bank is prepared to lower interest rates at its subsequent meeting in mid-June. So he says they're not going to lower rates next week, and they're probably not going to indicate that they're going to lower rates anytime soon either. Donald Trump's economic advisor, Moran, says he would be surprised if tariffs don't change in a few weeks. He also says that Trump has been clear there will be a deal with China. Also being reported today by Canada's Prime Minister, Trump is set to meet at the White House on Tuesday. And Moran says there can be some volatility in the economic data. And Doge is expanding their presence at the SEC. And Trump's fiscal year 2026 budget would increase defense spending by 13%. The CNN Fear and Greed Index today is down 5 points from yesterday. There's pretty huge swings going on here basically every single day. Yesterday, you were neutral at 47. Now you're back in fear at 42. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme greed. This is one of the most fascinating things about this market right now is, like, when you're going up on a day, it's everything. Okay, it's defensives, it's healthcare, it's, pharmaceuticals, it's small cap, like everything is rallying at the same time. When you're going down, everything's going down at the same time. There's a lot of correlation right now. Okay. Now put in call options in extreme fear. So people are very fearful still. Like, I know this market doesn't exactly look like that, but there's a lot of fear out there. Market volatility is neutral, safe haven demand, extreme greed, and junk bond demand in extreme fear. You can see just the level of negative sentiment with the AI Investor Sentiment Survey hitting its highest level you've seen throughout all of April. Keep in mind, April 7th is when markets hit the lows, okay? So you are more fearful now, or people feel more fearful now than they did when the S&P was down 21% at those lows. That's crazy to me. Okay, neutral investors at 19.8% and bearish investors or bullish investors hitting the lowest level throughout all of April at 20.9%. Never seen this before, especially on one of the strongest market rallies from the lows. Again, you have seen since 2020. Usually by this point, people are very bullish. I think what this highlights to me is if we do get some good news, if trade starts to die down, you could see people rush back into markets. Okay, like at a level I don't think we've seen in a long time, because a lot of people are bearishly positioned. A lot of people are not positioned for that upside. Hedge funds and institutions, there's too much risk, right? With a recession, a possible depression if Trump doesn't cancel the China tariffs, there's too much risk in being long this market right now. I understand that. Okay, so if we get a pause on China tariffs, which I think could come this weekend, a lot of people are going to be caught off sides in the beginning part of next week. That's how I'm positioned. That's what I'm positioned for. Obviously, that may not happen, but it looks like China wants to start negotiations. The only logical place to do that is with a pause on tariffs. Now, the percent of stocks trading above their 50-day moving average at 46.27%. You got about 6% of stocks today that are breaking above their 50-day moving average. You're almost back to that that normal range for the last 5 years. I say that's anywhere between like 50 and 60%. That's like a normal range for the last 5 years. Anything above like 65%, you start to get to the higher end levels. And then anywhere around 75 to 80 is like you're pushing it, right? So there still is quite a bit of room to move higher here again, on the right news. So let me know what you guys think about all of this down below in the comment section. Again, I think over this weekend, you probably will get that announcement of a pause on China tariffs. Think about it, okay? Before negotiations started with any country, there was a pause on the tariffs, okay? Before any negotiations even started, there was a pause on the tariffs. I don't think there's any other way to go about this with negotiations with China than to pause the tariffs first. And I think that news is basically like the trade war is over, okay? Once the tariffs are paused on China. That is the big risk here that, you know, we could see hyperinflation, a depression again, if we don't pause the tariffs on China, if we don't come to a deal here in the next couple of weeks. So as I've said before, the clock is kind of ticking here to get a deal done, to pause the tariffs on China. And I think this was the first step really towards pausing those tariffs, at least from China's perspective, right? Them saying the door is open is like them giving the first concession to Trump to actually, you know, get some progress done. So let me know what you guys think down below in the comment section. Obviously, I'm spitballing here, just giving you guys my raw thoughts nonetheless. But if that news does come out over this weekend, I think Monday is going to be one hell of a crazy day. So have a great rest of your day and your weekend. I will see you in the next one.